We start with a Bloomberg exclusive and one that may help bank stocks bounce back from the pounding that they took yesterday. The Federal Reserve has put a price on too big to fail, and it's 3%. So that means the world's biggest banks would have to set aside an additional 3% of assets compared with smaller lenders. The objective, of course, to prevent a meltdown in the case of another crisis. Joining us, one of the reporters who broke the story, Bloomberg's Craig Torres. He is on the phone with us right now from Washington. So, Craig, is this a sigh of relief? 3% probably looks better to the banks than 7%.
Oh, yeah, certainly. I think, I do know how the 7% number got out there, and obviously it's not the right number. What we're hearing is what's on the table in Basel when the regulators meet later this month is a 3% surcharge, and it goes down from there.
Is this enough to protect banks? I guess this is the larger question from the next crisis, wherever that comes from.
It's interesting, Deirdre, because the reason they want to put this in place, remember, the Basel negotiations are already raising, more than doubling, the base capital common equity these banks have from about, 2.5 to something like 7. And so the reason they want this additional buffer is they're not really convinced that they can unwind these banks in a crisis. So they're saying, if you're going to get into trouble, I want you to have an insurance policy that you have even more equity against loss, because I'm not sure you can be sold off. That's the reason it's being put in place.
Now, so it seems like then from the bigger picture stance, Craig, that obviously this is a big plus for the stability of the system.
It is, though you'll hear banks whine that it's going to distort markets, it's going to distort the way they lend, distort what they have on their balance sheet. But I also like the quote we have in the story today from Dean Okos. You know, there's another motive as well, and that is if all you are is a net interest margin company, that is where you take deposits and make loans and pay a dividend and have kind of, regular stable earnings, then can you really justify the salary of a master of the universe?
Yeah, he said, I think he told you can see why the banks are howling. Craig Torres, thanks very much for joining us. Congratulations on the scoop. Craig Torres joining us there with a Bloomberg exclusive.